हाँ, और इसके साथ साथ बोल रही स्वर्ग संसार अति उच्चतम जीवन करे परमार्थ में व्यवहार हो। ना हम रहे अपने लिए, हमको सभी से गर्ज है। गुरुदेव के आशीष से जो सोचने का फर्ज है। हो पुजारी तत्व के, गुरुदेव के आदेश के, सच प्रेम के नित्यनेम के, सत्कर्म के सत्कर्म के। झूठी राह की, अन्याय की, अभिमान की, सेवा करन को दास की, परवाह नहीं हो जान की। छोटे न हो हम बुद्धि से, हो विश्वमय से ईश में, हो राम में और कृष्ण में, जगदेव में जगदीश में। इंद्रियों पर ताप कर हम वीर हो अति धीर हो, उर्वर रहे सबसे सदा, निज धर्म रथ खंभीर हो। अति शुद्ध हो आचार से, तन मन हमारा सर्वदा, आध्यात्म की शक्ति हमें पल भी नहीं कर दे चला। इस अमर आत्मा का हमें हर श्वास भर में दम रहे। गौर मौत भी आ गई, सुख दुख हम पे कम रहे। थैंक यू। तूने केवल एक हमसे लेना, तो सबका लेना चाहिए था। लिया सबका। उसका आया फोटो भी नहीं आया सर, इसका तो फोन तो सबका नहीं लिया ना, कोई बात नहीं। तो टुडे वी हैव आवर डिस्कशन ऑन GST in case of charitable organization and NPOs, and we have our keynote speaker, partner Kalaninko LLP, Saurabh Basir, is partner at our Udaipur office. So I request Saurabh to please initiate the discussion, and then all our speakers can have their presentation. Thereafter, Saurabh, wherever required, can support you all. Saurabh.
Good afternoon, sir. Good afternoon, everyone. So the topic we have chosen is one where even senior professionals, make mistakes. So if you understand today's session well, you'll know something that many people in the practice still get wrong. So when we talk about charitable organizations, there is a common response that, sir, we are a registered charitable trust, so GST does not apply to us. While the people are not trying to evade tax, they simply believe something that is not true. And in today's whole session, this is built in such a manner, to correct that one wrong belief. So the wrong belief is that Section 12AA or 12AB registration under the Income Tax Act or the corresponding sections under the new Act also protects a trust from GST, while it does not, right? So there is a simplest way to remember the difference. Income Tax Act looks at who you are, right? Are you a charitable body or a business? While GST looks at what you are doing. Is this particular transaction a supply or not, right? So income tax judges you as a person, GST judges the activity one by one, right? So a trust can be fully charitable in its heart and on paper, and still do something that is fully taxable under GST, right? For example, a temple trust is charitable, but if it rents out its hall for a wedding, that renting is a taxable activity under GST, obviously subject to some specified limits under the Act. Hospital trust is charitable, but if it is running a pharmacy which sells medicines to outside customers, then that sale is taxable. So the trust does not become a business, but that one activity can get taxed under the GST legislation. So in fact, the same trust in the same year will usually have money coming in from, say, three different sources. Or you can just think of three different buckets, right? The first one is where money that is outside GST completely. For example, pure donations where the donor gets nothing in return. This money is not even counted for GST purpose, right? Second bucket can be money is exempted. So there is a supply, there is a payment. GST law does cover it, but a specific exemption entry is also there in the law, right? For example, genuine charitable activities like free health camps, hospital treatment, or a school teaching its own students. So these are pure exempted supplies. Now the last or third bucket where money is taxable, like hall rent, shop rent, or sale of books, sponsorships, event fees, right? So here the trust must charge and pay GST like any other entity once it crosses the threshold. So the skill that you should take home today is simple: the ability to pick up every rupee a trust receives and drop it into the correct bucket, right? So that is the whole subject is in detail, right? So, and to sort these buckets, one simple test or a small test which you can, you'll go through all the three sessions which are coming up. Every slide which will be shown today is only on application of that particular test. So the first question will be, is there a supply, right? Is the trust giving some goods or some services to someone? The second question will be, is there something given in return? Right? Is the other person paying money or giving any benefit in exchange for what the trust gives? A pure gift has nothing in return, right? Uh, a fee always has something in return. And the last question, is there a specific exemption entry under GST that covers it, right? Not a general feeling that charity should not be taxed. That is not how it works, right? There should be an actual entry in the exemption notification. If the answer to 1 and 2 is yes, and the answer to question 3 is no, GST is applicable, right? It is that simple. Coming to the session, our first speaker covers the foundation, what legal shapes a trust or NPO can take, the important definitions, what counts as a supply, reverse charge mechanism, online services from foreign websites, right? Then we'll cover the working rules. Which state gets the tax, when the tax becomes payable, on what value it is charged, and how much ITC a trust can claim, and when registration becomes compulsory. So then we'll have close look at this sector-wise picture on schools and colleges, hospitals, temples, and religious bodies, and the most fought over area of all, that is donations, grants, and CSR income. So now with this, I'll invite our first speaker to start the deliberation.
So Kasvi will be deliberating first.
Good afternoon to one and all present here. Today, I, Kashvi Badaya, along with my co-speakers Harsh Mulota and Rudraksh Agrawal, will be taking Saturday class on the topic GST on charitable trusts and not-profit organizations. So before starting with the presentation, I would like to brief you all about what charitable trusts and not-profit organizations are. चैरिटेबल ट्रस्ट एंड नॉट प्रॉफिट ऑर्गेनाइजेशंस वो इंस्टीट्यूशंस होते हैं जो बेसिकली सेटअप होते हैं फॉर एनी फिलैंथ्रोपिक या फिर पब्लिक पर्पसेस के लिए, बी इट एजुकेशन, हेल्थ, एनी मेडिकल केयर एक्सेट्रा, बट नॉट फॉर एनी प्रॉफिट मोटिव. These institutions are either registered under Section 12AA or 12AB of the Income Tax Act 1961. And the main crux of the entire presentation is how Income Tax Act treats charitable trusts and not-profit organizations, or how GST treats charitable trusts and not-profit organizations. So in my presentation, I will be covering the following topics. Introduction, historical evolution and the not-profit ecosystem in India. तो जब गवर्नमेंट ऑफ इंडिया जीएसटी एक्ट लाई थी ऑन 1 जुलाई 2017, तो उन लोगों के लिए बहुत बड़ा चैलेंज हो गया था टू डिसाइड कि चैरिटेबल ऑर्गेनाइजेशंस पे जीएसटी इंपोज करना है नहीं करना है, क्योंकि ये प्रॉफिट मोटिव के लिए नहीं फॉर्म होता है. इनका कोर ऑब्जेक्टिव जो होता है वो सिर्फ चैरिटेबल एक्टिविटीज ही होता है. तो इनकम टैक्स एक्ट जो है वो एंटिटी सेंट्रिक होता है. वो एंटिटी के नेचर को देखता है कि अगर एंटिटी चैरिटेबल एक्टिविटीज के अंदर एंगेज है तो उनकी इनकम एग्जेम्प्ट हो जाती है. ऑन दी अदर हैंड जीएसटी जो होता है वो नेचर ऑफ सप्लाई देखता है. वो ये बोलता है कि हमको इंडिविजुअल एक्टिविटीज को सेपरेटली इवेल्युएट और एनालाइज करना होता है, एंड उसी अकॉर्डिंग फिर हम लोग उस पर जीएसटी इम्पोज करेंगे. So unlike the commercial enterprises, charitable trust and not-for-profit organizations are established primarily for philanthropic, religious, educational, medical, and social welfare purposes. The core principle. GST applicability depends on the nature of supply and not the charitable status of the organization. The primary challenge under GST is that, unlike the Income Tax Act, which looks at the character of the entity, GST is transaction-oriented, which often requires analysis of whether a philanthropic activity would constitute a supply.
तो यानी कह रहे हैं कि इनकम टैक्स के अंदर तो इट इज द पर्सन, व्हाट इज द नेचर ऑफ द दैट पर्टिकुलर एंटिटी, एंड बेस्ड ऑन दैट दे से दैट देयर ऑल इनकम्स आर exempt, and even sometimes the business income which is incidental to their activity, charitable activity, that is also exempt. But here GST law is different. Here they are saying that you need to basically see what transactions they have done, and if the transactions are taxable, then there will be GST output tax to be levied on that. So yes.
लीगल फॉर्म्स ऑफ एनपीओज इन इंडिया. तो एनपीओ का जो लीगल स्ट्रक्चर है वो बेसिकली 3 हाफ्स में डिवाइडेड है, एंड कॉमन ऑब्जेक्टिव होता है सबका, दैट इज सोशल वेलफेयर विदाउट प्रॉफिट डिस्ट्रीब्यूशन. ईच इज गवर्न्ड बाय डिस्टिंक्ट लेजिस्लेशन. Most charitable activities also obtain registration under Section 12AA or 12AB of the erstwhile Income Tax Act 1961, now Section 332 of the Income Tax Act 2025, to avail the income tax exemptions, and separately obtain approval under Section 80G of the erstwhile Income Tax Act 1961, now Section 354 of the Income Tax Act 2025. तो एनपीओ जैसे मैंने बोला 3 लीगल स्ट्रक्चर्स में डिवाइडेड है. पहला होता है public charitable trust, that is governed by the Indian Trust Act 1882 or the state specific trust laws. Second is society, that are registered under the Societies Registration Act 1860. The third is Section 8 companies that are incorporated under the Companies Act 2013 for promoting commerce, art, science, etc. Question for the online participants. Under which legislation is a society registered as per the 3 legal structures of NPOs in India? A. Indian Trust Act 1882. B. Societies Registration Act 1860. C. Companies Act 2013. D. Income Tax Act 1961.
प्रतिष्ठा.
Yes, Pratishtha and Anurag.
Option B, Societies Registration Act.
Right.
So
क्या हुआ? आर्यन.
Activity based approach under GST, the governing principle. तो चैरिटेबल ट्रस्ट और एनपीओ जितनी भी रेवेन्यूज जनरेट करते हैं हम लोगों ने उसको 3 कैटेगरीज में डिवाइड करा है. पहला होता है 3 एक्टिविटीज या फिर 3 स्ट्रीम्स के अंदर आई वुड से डिवाइड करा है. पहला होता है आउटसाइड द स्कोप, प्योर अनकंडीशनल वॉलंटरी डोनेशंस, कॉर्पस कॉन्ट्रीब्यूशंस वेयर नो क्विड प्रो क्वो, दैट इज रेसिप्रोकल बेनिफिट. सेकंड होता है एग्जाम सप्लाईज, यानी specific charitable activities that are exhaustively defined under notification 12/2017, public health, spiritual or educational services. Third होता है taxable supplies, commercial activities such as renting of property, sale of publications, sponsorship arrangements or the corporate donors. GST versus income tax, a critical distinction. It highlights the fundamental legal and conceptual differences between how direct and indirect taxes view not-profit organizations. ये मैंने पहले भी बोला था, इनकम टैक्स एक्ट जो होता है वो एंटिटी सेंट्रिक होता है एंड इट फोकसेस ऑन द कैरेक्टर एंड ऑब्जेक्टिव्स ऑफ द इंस्टीट्यूशन, वेयरएज जो जीएसटी होता है वो ट्रांजैक्शन सेंट्रिक होता है. GST law is consumption centric and does not inherently distinguishes between profit making and not profit making organizations. Key statutory definitions for NPOs under GST. Understanding these fundamental definitions from the CGST Act is crucial for determining an NPO's compliance obligations and GST applicability to its activities. First is business, covered under Section 2, subsection 17, defined broadly to include any trade, commerce, manufacture, or similar activity, irrespective of any pecuniary benefit. This implies that even without a profit motive, an NPO's activities can be classified as business under GST. Consideration. Section 2, subsection 31. Encompasses any payment in money or kind made in response to a supply of service or good. Crucially, voluntary donations to NPOs without any reciprocal benefit are not considered consideration and therefore fall outside the GST scope. Person. Section 2, subsection 84. This definition explicitly includes trust, societies, and Section 8 companies. As a result, all such entities are recognized as legal persons under GST law and are subject to its provisions requiring compliance wherever applicable. Charitable activities, notification number 12/2017. Unlike broader definitions in other laws, GST provides an exhaustive list. Only 4 specific categories are recognized as GST exempt charitable activities. जो 4 स्पेसिफिक एक्टिविटीज अभी मैंने बोली उनको 4 पिलर्स ऑफ जीएसटी एग्जेम्प्ट चैरिटेबल एक्टिविटीज भी कहते हैं एंड ये एग्जॉस्टिवली एग्जेम्प्ट होती है फ्रॉम जीएसटी. नंबर 1, पब्लिक हेल्थ सर्विसेज, care for terminally ill, severe disabilities, HIV, AIDS, substance abuse, and public awareness on preventive health, family planning, HIV prevention. Second is advancement of religion, spirituality, or yoga. Activities like religious ceremonies, spiritual practices, and yoga services are exempt. However, sale of goods, example, books, statutes, etc., still remain taxable. Preservation of the environment. Activities focused on watersheds, forest, wildlife, afforestation projects, and ecological sanitation, wastewater management, etc. Educational and skill development programs. Exemptions for abandoned, orphaned, homeless children, abused, traumatized individuals, prisoners, and persons over 65 years of age in rural areas. GST definition is narrower than the income tax. The scope of charitable activity under GST is significantly narrower than the income tax. An activity that qualifies for IT exemption may still attract GST. So 12AB registration का मतलब ये नहीं होता कि आप लोग को GST exemption भी मिल जाएगा. अगर कोई चैरिटेबल इंस्टीट्यूशन 12AB के अंदर रजिस्टर्ड है तो उसकी इनकम जरूर एग्जेम्प्ट हो जाएगी, लेकिन उसके जो भी ट्रांजैक्शंस होते हैं हमको इंडिविजुअली इवैल्यूएट करना पड़ेगा टू डिटरमाइन वेदर इट वुड अट्रैक्ट GST और नॉट. Question for the online participants. What is the key risk highlighted about relying solely on the Section 12AB registration for the GST purposes? A, it guarantees GST exemption for all activities. B, it alone does not ensure GST exemption. Each supply must be evaluated separately. C, it exempts NPOs from RCM liability entirely. D, it means NPOs need not to register for GST.
Radhika and Tanishq.
The answer is B. It alone does not ensure GST exemption. Each supply must be evaluated separately.
Aggregate turnover earned under Section 2, subsection 6 of the CGST Act. Aggregate turnover के अंदर हम लोग क्या क्या इंक्लूड करते हैं? Let's study that. Aggregate turnover के अंदर सारी taxable supplies, exempt supplies, exports and interstate supplies include होती है. एग्रीगेट टर्नओवर और टैक्सेबल टर्नओवर दोनों डिफरेंट चीजें होती है. हम लोग टैक्सेबल टर्नओवर में एग्जाम सप्लाईज कभी भी इंक्लूड नहीं करते हैं, बट फॉर द पर्पस ऑफ कैलकुलेशन ऑफ द थ्रेशोल्ड टू डिटरमाइन वेदर अ पर्टिकुलर चैरिटेबल ट्रस्ट शुड बी रजिस्टर्ड अंडर जीएसटी और नॉट, वी नीड टू इंक्लूड द एग्जाम सप्लाईज एज वेल. So exempt supplies count towards the registration threshold even though they do not attract any tax. Then what's excluded? Excludes any taxes, that is GST, and inward supplies under reverse charge mechanism. Not supplies. Donations and unconditional grants जो होते हैं वो कभी भी हम लोग सप्लाई का पार्ट नहीं मानते हैं, तो these are also excluded. और इस पे कोई practical illustration जो है वो speaker two will cover it. Now, key takeaways for the compliance teams. अभी तक हमने जो भी पढ़ा, it is a quick summary of that only. GST is transaction based and not entity based. Charitable status does not automatically confer GST exemption. Each activity must be assessed on its own merits. Evaluate every activity separately. Map each service or supply against the relevant GST notification to determine taxability, rate, and exemption eligibility. Don't rely solely on the 12 AP registration. Income tax exemption and GST exemption operate independently. Separate compliance is required for each statute. Section 7, scope of supply and beyond. अब इसके आने वाले स्लाइड्स के अंदर हम लोग 4 टॉपिक्स मेजरली कवर करेंगे. दैट इज स्कोप ऑफ सप्लाई सेक्शन 7 which would constitute a supply under GST and when does it apply to NPOs. Second would be reverse charge mechanism. That is when the NPO becomes liable to pay GST on the inward supplies. Third would be OIDAR services, tax treatment for online information and database access services. And fourth would be exemptions, that is detailed notification analysis करेंगे हम लोग of notification 12/2017 and related entries. सबसे पहले होता है section 7, that is the gatekeeper of GST. इसका मतलब होता है scope of supply. GST के अंदर सप्लाई जो है दैट इज अ वेरी पाइवटल कंसेप्ट इन डिटरमाइनिंग टैक्सेबिलिटी. अगर कोई ट्रांजैक्शन को हम लोग सप्लाई कंक्लूड करते हैं, हम तभी उस पर जीएसटी इंपोज कर सकते हैं. So for NPOs, understanding what constitutes a supply is crucial to ensure compliance and identify potential exemptions. तो ये जो गाइडेंस नोट है इसने सेक्शन 7 को 5 प्रैक्टिकल बकेट्स के अंदर ब्रेक डाउन कर रहा है, विच विल बी डिस्कसिंग लेटर ऑन. हम सबसे पहले सेक्शन 7 की कोर डेफिनेशन एंड प्रिंसिपल्स को समझते हैं. All forms of supply includes all forms of supply of goods or services like sale, transfer, barter, exchange, license, rental, lease, or disposal, etc., made or agreed to be made in the course of furtherance of business. Activities by a person other than an individual to its members or constituents and vice versa for cash or for other valuable consideration. Import of services. ये ध्यान से सुनना. Import of services for a consideration regardless of whether it is in the course of furtherance of business. यानी it does not matter कि आपका course of furtherance of business हो रहा है या नहीं हो रहा. अगर आप import of services कर रहे हो and उसमें consideration involved है तो उस पर GST impose होगा. Schedule 1 activities. Schedule 1 activities जो भी Schedule 1 में specified होती है उनको हम लोग supply मानते हैं, even वो without consideration incur की जाती है. So this is the first practical bucket, that is the two prolonged test, consideration and the course of business. For an activity to qualify as supply under GST, it must generally satisfy 2 key conditions. This two prolonged test is fundamental for NPOs. Number 1 is consideration and number 2 is course of business. Consideration का मतलब होता है any payment, monetary or otherwise, in return for the supply. Even indirect benefits और quid pro quo. Quid pro quo का मतलब होता है कोई भी reciprocatory benefit जो आप receive कर रहे हो can constitute consideration. Note, अगर कोई सब्सिडाइज या फिर नॉमिनल फीस होती है हम लोग उसको भी कंसिडरेशन मानते हैं बिकॉज बिजनेस की डेफिनेशन इग्नोर करती है प्रॉफिट मोटिव. तो इवन चार्जिंग अ स्मॉल फी टू रिकवर एनी कॉस्ट वुड कॉन्स्टिट्यूट अ सप्लाई. Second is course of business. Any activity must be undertaken in the course of furtherance of business. For NPOs, this means systematic and regular activities regardless of the profit motive. GST implications for trusts and societies. तो पहली बकेट हम लोगों ने कवर कर ली है. बची भी 4 प्रैक्टिकल बकेट्स जो है वो ये है. सेकंड होता है एंड ऑफ म्यूचुअलिटी. पहले क्या होता था इस केस के अंदर, जो भी ट्रस्ट होती थी और जो उसके मेंबर्स होते थे हम लोग उनको सेपरेट या फिर डिस्टिंक्ट इंडिविजुअल्स नहीं मानते थे. बट अंडर द इनकम टैक्स फाइनेंस एक्ट में अमेंडमेंट जो आया था इन 2021 उसमें हुआ था अ ट्रस्ट और सोसाइटी एंड इट्स मेंबर्स आर लीगली सेपरेट एंटिटीज. Therefore, any facility or service provided to the members against a subscription fee is always deemed taxable. लेकिन इसका एक exception है, that is Kerala HC Division Bench in India Medical Association versus Union of India 2025 case that will be covered by Speaker 2 in detail. Second is deemed supplies under Schedule 1. While no consideration usually means no GST. Schedule 1 में वो activities cover होती है जो consideration involve नहीं करती है, but still हम उन पे GST impose करते हैं. For example, अगर आप एक permanent transfer कर रहे हो business assets का, जिसमें आप लोगों ने ITC claim करती है, despite the fact that आप उसको donate कर रहे हो freely without any consideration, but still वो Schedule 7 में मतलब Section 7 में cover होएगा and उस पे GST impose करेंगे हम लोग. The import trap. Importing services for a fee is always a supplier. However, if a trust pays a foreign architect for a project, the trust is liable for GST under the reverse charge mechanism. Absolute exclusions, Schedule 3. Activities listed here are immune to GST. Schedule 3 में basically वो activities cover होती है जिस पे GST impose नहीं होता या फिर कुछ particular prescribed limits होती है. अगर आपके एक्टिविटीज उस लिमिट्स तक इनकर हो रही है तो फिर हम उस पर जीएसटी इंपोज नहीं करते, बट अगर उससे एक्सीड कर रही है तो फिर आप उस पर जीएसटी लगाते हो. फॉर एग्जाम्पल, अ ट्रस्ट सेलिंग लैंड और अ फुली कंप्लीटेड बिल्डिंग टू फंड इट्स परमानेंट कॉर्पस इज नाइदर अ सप्लाई ऑफ गुड्स नॉर सर्विसेज. ये हम लोगों ने पढ़ा है कि सेल ऑफ एनी इमूवेबल प्रॉपर्टी जैसे बिल्डिंग हो गया, इन पे कभी भी जीएसटी अट्रैक्ट नहीं होता. क्वेश्चन फॉर द ऑफलाइन पार्टिसिपेंट्स.
ऑफलाइन कौन बताएगा? वही पहले ही आप पढ़ा करो.
As per Section 7 of the CGST Act 2017, which category treats an activity as a supply even when made without consideration? A. All forms of supply. B. Import of services. C. Schedule 1 activities. And D. Activities to members.
रक्षिता सी सही है वो.
एक्टिविटीज आउटसाइड सप्लाई. जब हमने रेवेन्यू स्ट्रीम्स को बाइफरकेट किया था तब हमने ये पॉइंट पढ़ा था कि जो आउटसाइड द स्कोप ऑफ जीएसटी एक्टिविटीज लाई करता है, तो ये वही दोनों एक्टिविटीज है. नंबर 1 है Schedule 3 की एंट्रीज. उसमें दिस इंक्लूड सर्विसेज बाय एन एम्प्लॉय टू द एम्प्लॉयर ड्यूरिंग द कोर्स ऑफ एम्प्लॉयमेंट. फॉर एग्जाम्पल, सैलरी हो गया, सैलरी पे कभी भी जीएसटी इंपोज नहीं करता है हम लोग. फ्यूनरल सर्विसेज हो गई, बैरियर सर्विसेज हो गई, एक्सेट्रा. अनकंडीशनल डोनेशंस एंड ग्रांट्स. अनकंडीशनल डोनेशंस जो प्योरली आउट ऑफ चैरिटेबल नेचर के होते हैं, हम लोग उस पर जीएसटी इंपोज नहीं करते हैं. लेकिन इसके अंदर एक एक्सेप्शन आ जाता है कि अगर कोई डोनर रिसीव कर रहा है स्पेसिफिक बेनिफिट्स, जिसको क्विड प्रो को भी कहते हैं, लाइक नेमिंग राइट्स, ब्रांडिंग और प्रेफरेंशियल ट्रीटमेंट, तो फिर उसका जो कैरेक्टर होता है इट मे बी रिक्लासिफाइड एज टैक्सेबल कंसिडरेशन. बट जो अनकंडीशनल होते हैं उस पर कभी भी जीएसटी इंपोज नहीं होता. रिवर्स चार्ज मैकेनिज्म, क्रिटिकल कंप्लायंस फॉर चैरिटीज. Under Section 9, Subsection 3 of the CGST-SGST Act 2017, the government specifies categories of supplies where the tax must be borne by the recipient. Charitable organizations acting as recipient taxpayers are frequently subject to this levy for various professional and logistical services. फॉलोइंग कैटेगरीज ऑफ सप्लाईज के अंदर जहाँ पे ट्रस्ट या फिर चैरिटेबल ऑर्गेनाइजेशन जो भी है, अगर वो एज अ रेसिपिएंट है ऑफ फॉलोइंग सप्लाईज, तो फिर उस केस के अंदर उसको आरसीएम में टैक्स पे करना पड़ेगा गवर्नमेंट को. नंबर 1, गुड्स ट्रांसपोर्ट एजेंसी. अगर सप्लायर जीटीए है तो फिर उस केस के अंदर ट्रस्ट को या फिर एनपीओ को जीएसटी पे करना पड़ेगा @5%. अगर सप्लायर है लीगल एडवोकेट और फर्म ऑफ एडवोकेट एंड द रेसिपिएंट इज आर चैरिटेबल इंस्टीट्यूशन और एनपीओ, देन इन दैट केस जीएसटी वुड बी अट्रैक्टेड @18% on RCM. Renting of immovable property. Where the supplier is central, state government or local authority, then in that case, the firm will be liable to pay GST @18%. Renting of residential dwellings. So where the supplier is any person with effect from 18 July 2022, where the recipient is NPOs or charitable institutions, then it would attract GST @18%. Security guard services. So where the supplier is any person other than a body corporate, then the GST would be attracted @18%. Sponsorship services. Any person other than a body corporate, जहाँ पे GST लगेगा @18%. Sponsorship services के अंदर basically क्या होता है, RCM falls on a trust itself only if it is a body corporate. यानी Section 8 companies जो होती है वो भी body corporate मानी जाती है. तो फिर ये जनरलाइज RCM नहीं होने की वजह से Section 8 कंपनीज को भी हम लोग ऐसे क्लासिफाई कर सकते हैं. Renting of any immovable property other than residential with effect from 10th October 2024, where the supplier is any unregistered person, then it would attract GST @18%. Question 3 for the online participants. Under the reverse charge mechanism, what GST rate applies to the legal services supplied by an individual advocate or firm of advocates? A. 5%, B 12%, C 18%, and D 28%.
Manan.
Option C, 18%.
Key takeaways for charitable trust. Import of services exemption. अगर कोई ट्रस्ट इंपोर्ट कर रही है सर्विसेज फॉर द सोल पर्पस ऑफ प्रोवाइडिंग एनी चैरिटेबल एक्टिविटी तो फिर वो एग्जेम्प्ट होता है अंडर एंट्री 10 ऑफ नोटिफिकेशन 9 2017 इंटीग्रेटेड टैक्स रेट। लेकिन ये एग्जेम्पशन OIDAR सर्विसेज पे कभी भी एप्लीकेबल नहीं होता, ये हमेशा टैक्सेबल होती है। मैंडेटरी रजिस्ट्रेशन सेक्शन 24। Even if a trust is engaged entirely in exempt activities and has no taxable turnover, it must register under GST if it is liable to pay tax under RCM. तो इसके ऊपर जो थ्रेशोल्ड लिमिट है ना वो कभी भी एप्लीकेबल नहीं होती है, यानी अगर फर्म RCM के अंदर टैक्स पे कर रही है तो फिर उसको GST रजिस्ट्रेशन मैंडेटरी हो जाता है अंडर सेक्शन 24। और अगर आप नॉन कंप्लायंस करते हो तो फिर फेलियर टू रजिस्टर एंड रेमिट GST is a common audit trigger. It can lead to the recovery of tax plus interest at the rate 18% and any significant penalties. Payment and ITC rules. RCM की जो लाइबिलिटी होती है हमें पता है हमेशा कैश लेजर के थ्रू डिस्चार्ज होती है, कभी भी आप ITC लेजर उस पर यूज नहीं कर सकते, लेकिन आप उसका ITC जरूर क्लेम कर सकते हो इन द सेम पीरियड प्रोवाइडेड द सर्विसेज वर यूज्ड फॉर टैक्सेबल आउटवर्ड सप्लाईज only. Meaning and scope of OIDAR services. Online information and database access or retrieval services. OIDR services are those which are delivered through the information technology over the internet for an electronic network where the nature of supply makes it impossible to supply it without the technology. These services are typically automated and involve minimum human intervention. मतलब OIDR सर्विसेज वो IT बेस्ड सर्विसेज होती है जिनके बिना आप अपनी चैरिटेबल एक्टिविटीज या फिर जो भी सप्लाई कर रहे हो वो कर ही नहीं सकते। तो स्पेसिफिक इंक्लूजन्स इन दिस डेफिनेशन वुड इंक्लूड एक्टिविटीज हो सकती है जैसे अगर कोई ट्रस्ट जो है वो सब्सक्रिप्शन ले रहा है गूगल वर्कस्पेस, माइक्रोसॉफ्ट 365 एक्सेट्रा, केस के अंदर वो OIDAR क्लासिफाई हो जाएगा। सेकेंड इज सेल ऑफ डाउनलोडेबल ई बुक्स और रिकॉर्डेड लेक्चर्स, online certification course with automated access, where an NGO provides any paid online childcare certification modules accessible through login credentials, cloud data storage services, where a trust stores donor and beneficiary data on Amazon Web Services or Google Cloud Service, website hosting and domain services, where a charitable institution purchases any website hosting from a foreign provider, physical classroom training with live faculty interaction. A trust often conducts online vocational classes in its training center. Pure donation collection through website. Donations collected online without without the supply of digital content do not become OIDAR. Now, this is important. Who pays GST on foreign digital services? ये थोड़ा सा confusing सा है तो थोड़ा ध्यान से सुनना इसको. The where rule destination principle. GST जो होता है वो destination based tax होता है, यानी GST is always paid in the country in which the service is actually consumed. So if even if a trust
paid in the state in its system.
if a trust in India uses a digital service like a foreign software, Indian GST must be paid even if the company is that is selling that service is located outside India, that is in Europe or maybe in USA. But question arises ये GST पे कौन करेगा? इसके अंदर फिर एक कंसेप्ट अराइज होता है नॉन टैक्सेबल ऑनलाइन रेसिपिएंट NTOR का. The law uses the term NTOR to identify who is buying the service. An NTOR is simply an unregistered person or trust in India that is receiving these digital services. So अगर आपकी trust registered है only for the TDS purpose and not for any regular GST, the law will still treat you as an unregistered NTOR. GST payment responsibility for foreign digital services, the who pays matrix. When a trust buys a digital service from a foreign supplier, the responsibility to pay the tax shifts based on the trust registration status. मतलब अगर जो इंडियन ट्रस्ट है वो फॉरेन से कोई भी सर्विसेज इंपोर्ट कर रही है या फिर कोई भी फॉरेन सप्लायर्स ले रही है OIDR सर्विसेज के अंदर, तो फिर उस केस के अंदर ट्रस्ट का रजिस्ट्रेशन बताएगा कि GST कौन पे करेगा. अगर ट्रस्ट जो है वो रजिस्टर्ड है अंडर GST तो फिर ट्रस्ट रेसिपिएंट है एंड इटसेल्फ उसको RCM के अंदर टैक्स पे करना पड़ेगा गवर्नमेंट को. लेकिन अगर ट्रस्ट NTOR है या फिर नॉट रजिस्टर्ड है फॉर GST तो फिर जो फॉरेन सप्लायर है उसको इंडिया में रजिस्टर होना पड़ेगा एंड देन द फॉरेन सप्लायर मस्ट पे टैक्स टू द इंडियन गवर्नमेंट. इसके कुछ दो सिंपल इलस्ट्रेशंस आई वुड लाइक टू टेल. दैट इज एन अनरजिस्टर्ड स्पिरिचुअल ट्रस्ट buys a subscription to a foreign webinar tool Because the trust is an NTOR, the foreign company is the one who must handle the Indian GST compliance, a registered NGO. A GST registered NGO buys a foreign cloud storage. Because the NGO holds the GST registration, it is an NTOR. Therefore, the NGO is responsible for calculating and paying the GST directly to the government. Question 4 for the online participants. If an Indian trust is unregistered for GST and NTOR and buys a digital service from a foreign supplier, who is responsible for paying the tax? A, the Indian trust under reverse charge, the foreign supplier who must register in India. No GST is payable in this case, the Indian government directly.
Team UB.
Option B, the foreign supplier who must register in India.
Yes, she is right.
Yes, sir.
So I'll add something, and this is
Yes.
not just related to trust. So most of you must have been using Netflix, right? Netflix is not, let's say, registered in India, or it is not incorporated in India, right? So now, if a registered person, for example, in this particular case, the trust, right? If a registered person is, subscribing to Netflix, then it is liable to pay GST under reverse charge mechanism. On the other side, let's suppose if any individual has subscribed to Netflix, in that case, Netflix will be liable to take registration in India and discharge the tax liability for that particular service. So even if the company is not incorporated in India and it is providing a service from its servers located outside India, then also GST implication is there, right? So in this particular case, we have taken this example of trust, but this is common across all entities where services are supplied through a digital mechanism.
GST liability and statutory compliance. तो एक तरह से समराइजेशन है अभी हमने OIDR सर्विसेज में जो भी पढ़ा था. अगर लोकेशन ऑफ सप्लायर ऑफ OIDR सर्विसेज एंड लोकेशन ऑफ रेसिपिएंट ऑफ OIDR सर्विसेज दोनों इंडिया में ही है, तो फिर GST उसमें फॉरवर्ड चार्ज पे पे होगा, नॉट एन RCM. अगर लोकेशन ऑफ सप्लायर आउटसाइड इंडिया है एंड द लोकेशन ऑफ रेसिपिएंट इन इंडिया है, बट जो रेसिपिएंट है वो NTOR है, यानी नॉट रजिस्टर्ड है, तो फिर GST फॉरेन सप्लायर पे करेगा बाय ऑब्टेनिंग द रजिस्ट्रेशन इन इंडिया. थर्ड है आउटसाइड इंडिया है अगर सप्लायर एंड द लोकेशन ऑफ रेसिपिएंट जो है वो इन इंडिया है एंड द पर्सन इज आल्सो रजिस्टर्ड अंडर GST, तो फिर उसमें GST विल बी पेएबल बाय द रेसिपिएंट अंडर द रिवर्स चार्ज. फोर्थ इज where both the recipient and the supplier are outside India, then in that case कोई GST liability attract ही नहीं होगी. Key statutory compliance points. Mandatory registration. The foreign providers must obtain a simplified registration via Form GSC REG 10 regardless of the turnover. Second, intermediaries. If the foreign supplier uses any electronic intermediary, the intermediary is deemed to be the service provider and must pay the GST. Reverse charge mechanism. A GST registered trust may pay the tax themselves via RCM when importing digital services or software from the abroad. OIDR implications for trust as suppliers and recipients. तो अभी हम लोगों ने वो वाले केसेस डिस्कस किए थे जहाँ पे ट्रस्ट जो थी वो रेसिपिएंट थी ऑफ द OIDAR सर्विसेज, बट ट्रस्ट सप्लायर ऑफ OIDAR सर्विसेज भी हो सकती है. तो as trusts increasingly move to the digital platforms, apps, portals, website, etc., they may inadvertently become OIDAR suppliers. तो following cases में जो भी फर्म या फिर जो भी ट्रस्ट जो है वो एक्टिविटीज कंडक्ट करेंगी वो टैक्सेबल मानी जाएंगी, जैसे पेड एक्सेस टू द रिकॉर्डेड स्पिरिचुअल डिस्कोर्सेस, डिजिटल मेडिटेशन कोर्सेज, डाउनलोडेबल ई बुक सोल्ड ऑनलाइन. लेकिन अगर कोई फ्री यूट्यूब लेक्चर्स है या फिर फ्री ऑनलाइन काउंसलिंग है वेयर देयर इज नो कंसिडरेशन, तो फिर वो नॉट टैक्सेबल होगी. Exemptions under Section 11 of the CGST SGST Act, Master Exemption. ये एक लिस्ट है बेसिकली ऑफ नोटिफिकेशन 12/2017 में अंडर सेक्शन 11 जहाँ पे एक्टिविटीज जो भी कंडक्ट करी जाती है उन पे पर्टिकुलर एग्जेम्पशन इम्पोज किया जाता है. ये एक ओवरव्यू है एंड वी बी कवरिंग इट इन डिटेल इन द लेटर ऑन स्लाइड्स. पहला है कोर चैरिटेबल एंड वेलफेयर एग्जेम्पशंस, एंट्रीज 1, 90, 46 एंड 80. Entry 1, the dual test. To qualify, an entity must hold a valid 12AA, 12AB registration, and the service must fall within the narrow four-pronged definition of the charitable activities: public health, advancement of religion, yoga, specific education for vulnerable groups, or environmental preservation. Old age homes, entry 90. Services, boarding, lodging, maintenance are exempt if provided to the residents 60 years of above age for a consideration of up to 25,000 per month. Veterinary clinics, entry number 46. Clinical medical care for animals or birds is exempt, but any commercial sale of pet food or grooming services may still remain taxable. Sports training, entry 80. कोचिंग इन रिक्रिएशनल स्पोर्ट्स बाय रजिस्टर्ड ट्रस्ट इज एग्जाम। लेकिन अगर कोई प्रोफेशनल या फिर कमर्शियल स्पोर्ट एक्टिविटीज है तो फिर उस केस के अंदर वो एग्जाम नहीं होगा। क्वेश्चन फॉर द ऑफलाइन पार्टिसिपेंट्स। As per entry 9D of the master exemption list, services by the old age homes are exempt if charges do not exceed what amount per month per resident? A 10,000, B 15,000, C 20,000, D 25,000.
सही है।
Healthcare, education, and libraries, entry 74, 66, 66A, and 50. These sectors enjoy broad exemptions to support social infrastructure, provided the institutions are recognized by the law. Healthcare, entry 74. Diagnosis, treatment, or care for the illness, injury is exempt. लेकिन while ambulance services are also exempt, hospital room charges excluding ICU exceeding rupees 5,000 per day are taxable. मतलब ICU के अंदर अगर आप कोई भी सर्विसेज है तो फिर उसमें वो एग्जेम्प्ट होगी, बाकी अगर एक्सीड कर रही है 5,000 रुपीज पर डे तो फिर वो टैक्सेबल हो जाएगी। एजुकेशन, एंट्री 66. This covers preschool to higher secondary education and recognized degree vocational courses. Private coaching centers and competitive exam tutorials will still remain taxable. Affiliation fees, entry number 66A. Affiliation services provided by the boards like CBSE are only exempt if the recipient school is government owned. Private schools must pay GST on these fees. Public libraries, entry 50. Lending of books and publications is exempt, but commercial premium study spaces or co-working lounges are always taxable. Religious activities and special programs, entries 13, 60. Yoga या फिर spiritual camps से related जो होती है. Religious ceremonies under entry 13A. Conducting rituals like pujas, marriages, or havans is exempt regardless of the entity's registration. Renting precincts, entry 13B. Renting of property owned by a trust for the general public is exempt if it stays below these thresholds. अगर कोई rooms है तो it should be less than rupees 1,000 per day. Community halls like Kalyan Mandapams, etc. rupees 10,000 per day से कम होना चाहिए. Shops या फिर commercial spaces जो है it should be less than rupees 10,000 per month. Yoga and spiritual camps. Residential retreats are exempt if the dominant objective is spiritual advancement. If positioned as a luxury wellness retreat, the exemption may be denied. Religious pilgrimage, entry 60. Restricted strictly to the specified bodies like the Hajj Committee or Kumaon Mandal Vikas Nigam, tours organized by the private trust are generally taxable. Donations, gratitude, and CSR branding. Determining if a receipt is a tax-free gift or tax service depends on whether the donor receives the benefit quid pro quo. Pure donations. ये हमने पॉइंट पहले भी कवर किया है, जो भी प्योर डोनेशंस होते हैं या फिर वॉलंटरी कॉन्ट्रीब्यूशंस होते हैं, where the donor do not receive any specific benefit in return, that is quid pro quo, तो फिर उस केस के अंदर that should fall outside the scope of GST. Display of gratitude, circular 1635/2019. Placing a simple name plate example donated by and the name of that individual is not taxable if it is purely an expression of the gratitude. लेकिन इसके में थोड़ा सा कंफ्यूजन हो जाता है कि अगर टैक्सेबल ब्रांडिंग जब आती है, अगर कोई ट्रस्ट जो है वो इंडिविजुअल के नाम को ना डिस्प्ले करके अपने बिजनेस का कोई लोगो डिस्प्ले कर रहा है, टैगलाइन डिस्प्ले कर रहा है, स्लोगन डिस्प्ले कर रहा है, तो फिर द पेमेंट इज रिकैरेक्टराइज्ड एज कंसिडरेशन फॉर द एडवर्टाइजिंग सर्विसेज। मतलब अगर बिजनेस का नाम है, लोगो है या फिर एक्सेट्रा कुछ भी चीजें हैं बट रिलेटेड टू द बिजनेस, तो फिर उस केस के अंदर उसको टैक्सेबल माना जाएगा एज इट विल बी ट्रीटेड एज एडवर्टाइजिंग सर्विसेज एंड टैक्स इम्पोज होएगा एट द रेट 18%. CSR funds. Pure CSR grants are not taxable. However, if the CSR agreement includes a statement of work with defined deliverables and milestones, it is treated as a taxable service contract. Question for the online participants. If a charitable trust displays a donor's business logo or tagline in exchange for a donation, how is this payment treated under GST? It remains a pure donation exempt from GST. It is recharacterized as consideration for the taxable advertising service. It is treated as a corpus donation. It is exempt under entry 13 for religious ceremonies.
Harsh Agarwal.
So answer will be B.
Saurabh, you wish to add anything?
So, as I said, I think the transaction has to be seen rather than the nature of entity or the incorporation status, right? Under GST, you have to see whether a transaction is in the nature of supply or not, right? Because that is the first trigger point for taxability. Then, as mentioned, we have to go and see the exemption notification, because all the transactions under GST are by default supply transactions and liable to tax unless there is a specific exemption under the notification. So these are the two trigger points which we need to evaluate before considering that a transaction is taxable or not. The entity status does not make any difference, at least for GST purpose.
So, understanding GST isn't just about knowing the law, but it tells us about how it applies, when it applies, and how it impacts an organization. So, here is a quick summary of what we'll cover in our today's class. It will be the place of supply, time of supply, value of supply, input tax credit and registration, and the AAR and AAAR framework. So, let's start with place of supply, which is governed by Section 10 to Section 14 of IGST Act. Why it matters? For trusts which operates across multiple states or receive their funding from abroad, place of supply decides how the correct determination of the GST. If the supplier and the place of supply falls in the same state, then it would be treated as intra-state supply and CGST and SGST would be applicable. If the supplier and the place of supply falls in different states, IGST would be attracted and it would be considered as interstate supply. Getting place of supply wrong means the wrong tax head is credited, a common trigger point for GST notices in the NPO sector. Now, there are some key transactions which are related to charitable purposes to determine the place of supply. First is renting of immovable property. Section 12, subsection 3 of IGST Act would be applicable. Place of supply would be the location of the immovable property. In case of training and workshop services, Section 12, subsection 5, IGST Act would be applicable. And in case of unregistered recipient, it would be the place where the services have been performed, and otherwise, it would be the location of registered recipient. In case of foreign grants, since it is outside the scope of GST, not a supply, the Foreign Contributions Regulations Act would govern it. Event management, Section 12, subsection 7 of IGST Act would be applicable. In case of unregistered recipient, the place of supply would be the place where the event is actually performed, and otherwise, it would be location of registered recipient. Question 1 for online participant. The place of supply for renting of an immovable property is A. Location of the supplier, B. Location of the recipient, C. Location of the immovable property, D. Place where the payment is received.
Bhavana.
Option C.
Correct. Now, time and value of supply. Every GST transaction turns on two questions, which are answered by two different provisions of the CGST Act. When does GST liability arise? It is governed by Section 12 and 13 of CGST Act, which is time of supply. And on what amount GST is calculated is governed by Section 15, which is value of supply. It is very important because interest is charged when GST is paid after the time of supply at the rate of 18% per annum. And especially in case of RCM transactions, misidentifying the time of supply is the most common cause of interest demands on NPOs and charitable trust. So here we are learning about time of supply in case of goods. This provision is applicable if the trust sells taxable goods. First scenario, invoice issued within prescribed period. Here, prescribed period is in case where the supply involves movement of goods. Invoice needs to be issued at the time of removal of goods or at the time of delivery of goods. And so in case of invoice issued within the prescribed period, the time of supply would be the earlier of date on which invoice is issued or the last date by which the invoice is also have been issued. Invoice is not issued within prescribed period. Then time of supply would be the date when the supplier receives the payment. That is the books of the account, in the books of the accounts or bank account is credited, whichever is earlier. In case of reverse charge, that is where the trust is the recipient of the supply of goods. It would be the earliest of A, receipt of the goods, B, date of payment. Again, it is books of accounts or bank of credit, whichever is earlier, or C, 30 days after supplier's invoice. If it is not possible to determine the time of supply in the above three A, B, C points, then time of supply will be the date of entry in the books of the accounts of the recipient. Now, time of supply in case of services, which is governed by section 30. It is the most relevant provision for charitable trust. If invoice is issued within 30 days of supply, time of supply would be the earliest of date of invoice or date when payment is received. If invoice not issued within 30 days of completion of service, the time of supply would be date of completion of service or date payment is received, whichever is earlier. If both the conditions is not met, then time of supply would be date on which the recipient records the receipt of service in its books of accounts. Question 2 for online participant. If an invoice is not issued within 30 days of completion of service, the time of supply is A, date of invoice only, B, earlier of the date of completion of service or date of receipt of payment, C, date of GST return, or D, date of agreement.
Tanmay. तन्मय नवंबर 28।
Answer is option D.
Correct. Now, reverse charge and advance payment. Reverse charge, that is, the trust is a recipient of the services. So time of supply would be the earlier of A, date of payment, that is books entry or bank debit, whichever is earlier, or 60 days from the supplier's invoice date. If neither can be determined, then date of entry in recipient books of accounts. A special point to remember, where the recipient itself must issue the invoice, that is in case of unregistered recipient delivering the services. The time of supply would be the date of that invoice. Another remembering point, if a trust is supplying a services and advance is received for that service, then GST becomes payable at the date of receipt of advance, not at the time of actual service delivery. Now, continuous supply, which is differentiated between goods and services. Continuous supply of goods, that is providing continuously or recurrently under a contract, like through wire cable, like in the television subscriptions, where continuous supply of is there. So if periodic invoicing by the supplier, then invoice should be issued before or at the time of each successive statement of accounts or payment received. In case of continuous supply of services, that is, continuous supply of service means providing continuously or recurrently under a contract exceeding 3 months. Invoice timing depends on whether due date is fixed in a contract, linked to an event, or supply ceases mid-contract. Standard suppliers, including trusts and NPOs, must issue invoice within 30 days of each contractual event requiring payment. But for banks, financial institutions, and NBFCs, it would be 45 days. So here is a quick summary. Like if the continuous supply of services, scenario 1, due date of payment is identifiable from the contract, then invoice to be issued on or before the due date of payment. Second scenario, due date of payment is not identifiable from the contract, then invoice to be issued on or before the supplier actually receives the payment. Scenario 3, payment linked to completion of service, like in case of contracts, building, construction. So invoice is to be issued on or before the date of completion of payment. Scenario 4, supply cease mid-contract. For example, if there's a disagreement between the supplier and the receiver, then the contract ceases. So invoice to be issued at the time when supply ceases. And the amount of the invoice should be the extent supply made before cessation. Now, time of supply in a common trust scenarios, like for example, one is renting commercial property. For example, the rent for April is invoiced on 1st, received on the 10th day. Since the invoice is issued within the time limit, the time of supply would be the 1st April. Second, sponsorship or advertisement. Rupees 5 lakh received for logo display as event sponsor. Consideration is for taxable service. Section 13 applies here. Example 3 is taxable training program. Advance fees collected before the course. Time of supply arises at the time of receipt of payment or invoice, not at the time when actually the service is performed. And last example is non-exempt accommodation, where exemption conditions aren't met. Time of supply follows invoice issuance or receipt of consideration. Now, donations and grants. Does Section 13 apply? So in case of charitable trust and NPO, the primary test is, does the amount received constitute consideration for a supply? Like for take one example, there is a pure voluntary with no obligation to provide goods, services, advertisements, any benefits, rights, or any advantage. A donor simply contributes 10 lakh rupees to a charitable hospital and only a donation receipt has been issued. So here there is no supply of any thing in consideration of rupees 10 lakh. So section 13 does not apply and it will not be considered as supply. And another example, where a company contributes 10 lakh rupees for a health camp and the trust agrees to display the company name, logo as a healthcare partners across banners, brochures, and media. Since here's a promotional benefit, we are giving our advertisement service to the other side. So here GST provisions would be applicable and it would include in section 13, it would be considered as supply. Question number 3 for online participant. If donation is pure voluntary and there is no obligation to provide any goods or service, then A, GST is payable. B, it is an exempt supply. C, it is not a supply and section 13 does not apply. D, it is a zero related supply.
Krishna.
Option C, it is not a supply and section 13 does not apply.
Correct. Now, section 15 of CGST Act, that is value of supply. We have understood that what is the place of supply, what will be the time of supply, but on which amount we have to pay the GST is the main concept. So here it is the taxable base on which the GST is going to be calculated. Value of supply is the transactional value. That is the price which we actually paid or payable for the supply, where the supplier and the recipient are not related persons and the price is the sole consideration. For charitable trust, this is the amount charged from the beneficiary, donor in case of a contracted CSR arrangement, government or other recipient of service, plus any additional amounts which are includable as per section 15, subsection 2 of CGST Act. Here is a summary of what will be included in the value of supply. First is tax, duties, cesses, fees under other laws like statutory duties charged alongside services fees are includable. Second, amount incurred by recipient on supplier's behalf, like CSR reimbursements for travel, printing, or project expenses, which are part of taxable value. Incidental expenses, documentation charges, facilitation fees, ancillary charges billed with the main service are also included. Then fourth is private subsidies, which are linked directly to price. May need to be added, but here's an exception. Government subsidies are excluded. Interest or late payment charges, like interest on overdue fees, is also included in the value of supply. Section 15, subsection 3 would tell us about what is not included in the value of supply. The first one is pre-supply discounts recorded on the invoice. Like for example, we have given fees concessions to students, senior citizens, or economically weaker beneficiaries. If the amount of discount is shown on the invoice, then it can be excluded from the value of supply. Second is post-supply discounts under a prior agreement. Deductible होंगे जब section 15 subsection 3 clause B के conditions met होगी. That is ITC reversal by the recipient. Finance Act 2026 amends this section by removing the pre-agreements and invoice linking conditions for post-sale discounts. This yet to be had notified. Government subsidy and exclusion. Subsidies जो हमें सेंट्रल गवर्नमेंट या स्टेट गवर्नमेंट से मिलती है वो कभी वैल्यू ऑफ सप्लाई में इंक्लूड नहीं होती है. सिग्निफिकेंट रिलीफ है ये ट्रस्ट के लिए जो गवर्नमेंट सब्सिडी स्कीम पे चल रहा है. लेट्स टेक अ सिंपल एग्जांपल. Here is a trainee program which is around 3,500 rupees per trainee, and 3,000 has been received from government subsidy and 500 is a trainee contribution. So here the 3,000 rupees of the government would be excluded from the value of supply and only 500 rupees, which is the trainee contribution, would be charged. Value of supply, some more examples of that. First is renting of property. A trust rents a commercial shop for rupees 3,000 per month. If taxable, value of supply is generally 50,000 rupees per month. Hostel accommodation. It is rupees 30,000 per month per person, where exemption conditions aren't met. Value of supply is generally the amount which is charged to the resident. In case of sales of goods, handicraft made by beneficiaries sold at rupees 1,000 per item. If taxable, no provisions would be applicable and value of supply would be generally 1,000 per item. Concessional pricing and CSR valuation. For example, since charitable organizations have been made for doing the beneficiaries of the society charitable purposes, so there is a charitable diagnostic center which charges only rupees 300 for a test, like a MRI test. While in market, the same cost would be 1,000 rupees, where the patient is unrelated to trust and price is a sole consideration. The value of supply is generally 300 rupees, not the market rate. We would not consider that in market we would go and we charge 1,000 rupees, so the value of supply would be 1,000. If both the parties are unrelated, and since it is the consideration, 300 would be only charged. CSR receipts, whether it would be considered as donation or brand promotion service. For example, X Limited gives 25 lakh rupees for the school classrooms. If it is generally for the benefit of the school children, there is no marketing, it would be considered as pure CSR activity. And in case if there are logos, taglines, or promotion of the organization, then it would be considered as the supply of the advertisement, and the amount received would be the value of supply. So here's a quick reference of time and value of supply. If there is a paid workshop and fees is collected in advance, then time of supply would be the date of receipt in advance, and value of supply would be the full value fees received, approved discounts agar deductible honge to. Scenario 2 is like hall rental, which is invoiced on 15th monthly. Then earlier of time of supply would be earlier of invoice date or receipt of rent, and value of supply would be the agreed rent plus extra charges which would be incurred on behalf of the tenant. CSR contracted service. Time of supply would be earlier of invoice on milestone or payment release, and value of supply would be the contract amount per milestone plus reimbursement. Hostel accommodation, which is 22,000 rupees per month, taxable. Time of supply would be the invoice or billing date or receipt, whichever is earlier, and value of supply would be 20,000 per month, excluding any government subsidies. Input tax credit. Please take a very serious look at this. It is a bit complicated if you try to understand. So, in case generally charitable and NPOs do not have a taxable supplies because they were doing charitable activities. So, where a trust makes both taxable and exempt supplies, input tax credit on common inputs must be apportioned under Rule 42 and Rule 43. The symbols are T is for total common credit which we have available. T1 is the input which is for non-business use, like for private or personal uses. Like for example, an individual has purchased furniture. So the input tax credit would not be included. T2 would be the exempt supply use. That is the input tax credit which has been used for exempt supply. T3 is the ITC which has been blocked under section 17, subsection 5. T4 is the tax input which is exclusively taxable. C2 is the common credit which is derived from total ITC available, less T1, T2, T3, and T4. Now, since we get the credit which is applicable to all, like for non-business, for business, for taxable, and for exempt. So we have to apportionate it. So there is a formula called D1, which is exempt reversion ratio, that how much of the ITC we have to reverse. So it would be the credit available after deduction, it multiplied by value of exempt supply divided by total turnover. Let's take an illustration to understand it in an easy way. Suppose there is a charitable organization which has a total turnover of rupees 1 crore, out of which 30 lakh rupees is taxable and 70 lakh rupees is exempt. The common ITC, that is the C2, is rupees 5 lakh rupees. So by applying this formula, we would get the input tax credit which is for exempt supply. That is 5 lakh rupees into 70 upon 100. That is the taxable turnover ratio. So it would be 3.5 lakh would be reversed in GST or 3B, and 1.5 lakh, which is for taxable supplies, would be attributable and eligible ITC could be claimed. Now here is a summary of blocked credits. That is section 15, subsection 5. Food, beverage, and outdoor catering. Blocked unless the trust is itself engaged in the business of supplying such services. Second point, beauty treatment, health, and cosmetic services. Blocked unless the trust provides these services. Third point, works contract for immovable property. Input tax credit on construction, renovation of trust buildings is blocked, other than plant and machinery. Construction of immovable property on own account. It is also blocked even when used for trust activities. So here is section 22 of CGST, registration, threshold, and aggregate turnover. So if your aggregate turnover, which has been defined by Kashmir in the first presentation, is 20 lakh rupees in case of services, which is general threshold, 10 lakh rupees in special category states, and 40 lakhs if the goods only suppliers, specific to some certain conditions. Aggregate turnover includes exempt supplies, but donations and unconditional grants are not supplies and are excluded. For example, there is a paid workshop called rupees 8 lakh rupees as paid workshop. Donations of rupees 15 lakhs are excluded. All rentals are 8 lakh. So the aggregate turnover is 16 lakh rupees. Since it is below threshold, no registration is needed. However, in the same case, if the exempt healthcare services of rupees 6 lakh are also included, then the aggregate turnover becomes 21 lakh rupees and the registration becomes mandatory. Now, these are the scenarios where compulsory registration is required regardless of turnover limits, which we have studied in the previous section. So the first case, it would be if the charitable trust is making interstate taxable supplies. Second would be it is a casual taxable person like temporary events in another state. Person is liable to pay tax under RCM. Fourth is if the charitable trust is a TDS deducted under section 51. Fifth point is supplies is made through e-commerce platforms. And sixth is input service distributors. Trust must assess section 22 and section 24 together, because if you are just only seeing turnover, it never settles the question. Now we have some examples of the income, like for example, donations is outside the scope of GST. CSR pure grants are also outside the scope of GST. CSR contracted are included in the value of supply and it is taxable. Rental income is also taxable. Healthcare entry as per NP 74 is exempt from GST, and foreign contribution funds, since these are also outside the scope of GST, would be governed by Foreign Contributions Regulations Act. Question 4 for online participant. A person making interstate taxable supply is A, exempt from registration, B, required to register only after focusing the threshold limit, C, required to obtain compulsory registration, D, required to register only if supplying goods.
खुशी जैन and Lashita Mantri.
Option C.
Correct. Now it is the AAR and AAAR framework. Let's understand it very simply in a simple way. AAR is Authority for Advanced Ruling and AAR is Appellate Authority for Advanced Ruling. Let's say that Mr. X is a person who is starting a business and he has various questions about whether GST registration is required, whether it supplies taxable, at what rate. So simply he can go to it, he can apply for an authority for advanced ruling. He can go to the GST department and ask certain questions and get an official ruling from him. It is the first level. The GST department mechanism would understand the facts of the case and give its opinion, advice, or ruling. The ruling is only applicable to that particular person who has asked the question. If the person or the GST department is not satisfied with the response of the or the ruling of the AAR, then they go for appellate authority for advanced ruling. Here, it can either agree with the ruling or can reverse it or can give its extra opinion or change the opinion. The point to remember is that authority for advanced ruling can be initiated only by the taxpayer. The GST department cannot initiate any problem. It can only intervene when the ruling has been done by authority for advanced ruling. Since the decision of both the framework is applicable only on the particular taxpayer, here comes it with the limitations. First, it is binding but narrow. Rulings bind only on the applicant and the jurisdictional officer, never a precedent for the other taxpayers or the states. Second, inconsistent across states. For example, the AAR framework of Rajasthan had a different opinion on a similar case, and of Maharashtra had a different opinion on a similar case. So there is inconsistency. Third is appealable. Since we have the opportunity to appeal against the ruling of the AAR framework, it also comes with a little limitation. So the appeal can be made within 30 days, and the limit can also extend to more 30 days in some if there is a sufficient cause or reason. Fourth is persuasive value. Even when not binding, ruling shapes departmental practice and interpretational trends. Here it is the case 1, which we will learn about. It is the Dream Runners Foundation. So basically, it is a charitable organization which has been registered under Section 12AA of Income Tax Act, and it organizes annual marathon events to promote health, fitness, social welfare, and it also includes support for underprivileged peoples with the disease. The trust levies a mandatory registration fee on participants. Surplus after the cost would wholly go for the charitable trust. So They also get the doubt that जो ये मैराथन करा रहे हैं क्या वो एक चैरिटेबल एक्टिविटी एंड एग्जाम्प्ट है, क्या जो रजिस्ट्रेशन अंडर 12A हो रखा है इनकम टैक्स एक्ट की वजह से वो उसको जीएसटी से एग्जाम्प्ट करता है, या जीएसटी रजिस्ट्रेशन नंबर मैंडेटरी है, कैन एंट्री फीस बी ट्रीटेड एज टैक्स एग्जाम्प्ट डोनेशंस. एंड अगर ये लोग ये क्वेश्चंस रेफर नहीं करते एंड दे हैव अंडरटेकन द एक्टिविटी, दे मे फेस सम लीगल consequences. So here is the ruling of the AAR that रजिस्ट्रेशन होना 12AA के अंदर, दैट इज इनकम टैक्स एक्ट 1961 के अंदर, आपके लिए कोई जीएसटी की इम्यूनिटी पिन नहीं है, दैट यू आर टोटली एग्जाम्प्ट फ्रॉम जीएसटी. इनकम टैक्स रजिस्ट्रेशन डज नॉट ऑटोमेटिकली कन्फर जीएसटी exemption. Indirect tax runs on its own test. Second is clause 2R of GST is exhaustive. That is, only 4 heads are qualified, which is public, health, religion, spirituality, yoga, education for orphaned and traumatized persons, environmental preservation. Marathon is not a listed charitable activity. Marathon is an event management, branding, logistics, public relations, mirror standard commercial event. It does not fit in any of the above 4 heads. And here the entry fees is treated as consideration. That is, the fees is paid for the participating in the event, getting the kids, prizes, and other amenities. Hence, it is taxable and would be treated as consideration. Case 2, which is Jaya Shankar Gramin Adivasi Vikas Sanstha. It is also a trust registered under Section 12A government, which does like providing shelter, food, medical aids, counseling, legal aid to women survivors of violence, or orphan or homeless children. And they also get reimbursement from the government against their certified expenses, which is amount to up to ₹2 lakh per month. So they also ask similar questions to the AAR framework, that is GST registration required for this welfare implementation? Do per capita government grants amount to taxable consideration? C, if taxable, what SAC classification and rate would be applied? So it is a very interesting case because at first AAR has given a different ruling, and when it goes to appellate authority for advanced ruling, the ruling would be different. So let's see what just the authority for advanced ruling has given the decision. It is on 10th of November 2021. Again, same scenarios. I think they have copied from a different case. Like 12A status is not a GST immunity pin. Clause 2R does not contain these types of activities. Hence, it is taxable 18% of service in the business. But when this case has been moved forward towards appellate authority for advanced ruling, the decision is reversed. They said no business element. There is only welfare obligations which are executed without profit motive or market competition. And these are not business under Section 7(1)(a). The state acts as a welfare facilitator, not a commercial consumer receiving reciprocal benefits. It is just the pure cost reimbursement. Funds are consumed for the cost we have make up, and there is no profit motive. So hence it is non-taxable. So here is some significance like draft as welfare allocations. MOUs and grant agreements should be worded as cost reimbursement fund allocations, not vendor style service level agreements. Like in this scenario, if the agreement has been held between the government and the charitable trust, so the agreement should clearly state that we are just reimbursing the cost you have incurred for the activities. There is no like we are giving some amount for consideration and receiving some goods. So this should be there. Second point is separate, exempt, and gray area activities. Interminglingly, clearly exempt work with non-specified causes put the whole revenue stream at risk in the first round. The most important point is third, appeal is real remedy. The AAR framework purposely reading show that first instance ruling are never final. They can be given a second chance or a review, and thus a hyperliteral AAR view can still be corrected on appeal. Case 3 is Children of the World India Trust, which is done under Maharashtra. So a 12A registered trust which operates a CARA accredited specialized adopting agency running childcare centers for rehabilitation, protection, and domestic intercompany country adoption of abandoned, orphaned, and underprivileged children. It collects regular adoption fees from prospective adoptive parents under Regulation 46, applied exclusively to childcare, medical expenses, and legal documentation. So this also have two questions referred to AAR framework. Do statutory child placement activities qualify as charitable activities? Are Regulation 46 adoption fees taxable consideration or exempt? So here is the ruling. Children are not goods. Fees held are fully exempt. Perfect mapping with clause 2 are shelter, care, reintegration of abandoned, orphaned, or homeless children align exactly with exempt education / skill development head. Fees aren't market driven. Adoption law exists precisely to prevent trafficking and commercial exploitation. CARA sets fees a structured cost recovery, not price recovery. There is no commercial consideration. The fixed fee represents cost recovery towards institutional child maintenance, not a fee for service exchange. Exemption granted in full. Since the core activity is a specified charitable activity, adoption fees are fully exempt. Now here's a quick summary of all the three cases. In first case, which is the Dream Runners Production Foundation, the activity was marathon event, and outcome is it is taxable. Second is Jayashankar Gramin. So here it is the decision has been changed, so it would be a welfare scheme and hence exempt from the GST. Third case would be the Children of the World Trust. Here it is a adoption fee which is for cost recovery only, and outcome is exempt. Now there are some High Court decisions. First, whether hostel accommodation by charitable institution could qualify as an exempt residential dwelling supply. Before entry 12A53rd GST Council inserted, we have differentiated between two cases. First is pure residential accommodation. There is no institution attachment eligible for the residential dwelling exemption, which is exempt from GST. Second scenario, if the hostel is also serving the mess, warden, staff room services, then we have to differentiate it and treat it differently. But when the 53rd GST Council inserted entry 12A has been come with effect from 15/7/2024 with retrospective regularization, creating a specific exemption for hostel accommodation, which is 20,000 rupees per month, and stay should be more than 90 days. Second point of the High Court is the multiple High Courts have consistently held that RCM applies to charitable trusts without exception. No pure charitable cheat. एक ट्रस्ट अपने आप को प्योर चैरिटेबल बोल के कि हम सिर्फ ओनली बेनिफिट ऑफ सोसाइटी के लिए सर्विस करते हैं, प्रॉफिट मोटिव नहीं करते, इट डजंट मीन दैट दे आर प्रोटेक्टेड फ्रॉम आरसीएम प्रोविजन. The argument that a trust is purely charitable and therefore outside the GST framework has been rejected, where it procures notified services from unregistered vendors. Interest and penalty upheld. Courts have upheld interest and penalties levies on trusts that fail to permit RCM on legal, that is 18% per annum, and security services from unregistered suppliers. Triggered is the inward supply. The obligation to register for RCM purposes is triggered by the nature of inward supply, not by the trust outward activity character. 18% per annum interest is applicable in case the interest has been imposed from the due date of RCM payment in multiple cases, confirming RCM as a hard cash payment obligation. Third scenario, which is the judicial scrutiny of performance linkage. इंडिया के अंदर बहुत सारी ग्रांट्स जो कि गवर्नमेंट द्वारा इशू की गई थी टू द पीपल टू द चैरिटेबल ट्रस्ट एंड द एनपीओस, उनके ऊपर कभी कभी स्क्रूटनी होनी चाहिए कि whether they have been used for the purpose for which they have been issued. So if the courts are increasingly examining the substance over labels when a government transfer is called a grant, if the grant is unconditional, not tied to any specific outputs, it is fall outside the ambit of supply and are not subject to GST. If the grant is performance linked, then linked to per beneficiary outcomes, vaccination counts, enrollment numbers, or measurable deliverables examined as potential consideration for supply. We just have to look the substance over the form. The designation of transfer as a grant in the government order is not conclusive. Courts examine the substance of the arrangement. Again, a reference case to understand the next topic is the Srimad Raj Chandra Adhyatmik Sanstha Satsang Sadhana Kendra. The trust is primarily engaged in the promotion of religion, spirituality, yoga through satsang, meditations, religious discourses, and the other teachings of the Jain religion. The trust levies a mandatory registration fee on the participants. Surplus after event cost is used wholly for the trust charitable objects. In addition to receiving voluntary donations, the trust operates a divine shop for the sale of spiritual and religious materials like books, DVDs, pamphlets, diaries, and statues. The amount collected are mainly towards recovery of operational and production costs, and any surplus generated is utilized solely for the furtherance of the trust religious and charitable activities. They have asked the question to AR framework whether a public charitable trust formed with the primary objective of advanced religion, spirituality, or yoga falls within the definition of business. So the decision would be the AR observed that the statutory definition of business under the CGST Act is incredibly broad. Under Section 2, Subsection 17, Clause B of business explicitly excludes any activity or transaction in connection with or incidental or ancillary to trade or commerce, whether or not there is a profit motive. So following the AAR Maharashtra ruling, tax authorities now examine the tax trust deeds more closely. Standard enabling clause, which is the objective clause of the trust, permitting a trust to buy, sell, or lease properties, enters into contracts, trade in goods, have been cited as evidence of business capacity under the broad GST definition of Section 2, subsection 70. We, as a articles and the chartered accountants, practitioners, are three action points. Like first, we have to review the existing deeds. Review existing trust deeds of all client charitable organizations for broad enabling language. Second, limit new drafting. Where deeds are being freshly drafted or amended, include express language limiting enabling clause to activities solely in furtherance of the charitable objects. Third, get a legal opinion. Obtain a legal opinion where trust deed language creates potential GST exposure. There is a case of end of mutuality. First, I would like to explain what is doctrine of mutuality. Earlier, the trust and their members were considered as the same person, but due to this lack, there is a lack of GST revenue to the government. So by Amendment Act, Finance Amendment Act 2021, they have introduced a concept that both the members and the trust are the separate legal entity. That is the end of the mutuality. But there is a case in Kerala High Court, Indian Medical Association versus Union of India. They have applied the case that no, we are the same persons as we are supplying the services towards each other. So the deeming provision struck down. The court declared Section 71AA its explanation and Section 2, subsection 70E of GST Act inserted via the Finance Amendment Act 2021 unconstitutional and void retrospectively. Statute cannot override doctrine. Ordinarily, legislation cannot circumvent the doctrine of mutuality by deeming a mutual organization and its members as two distinct persons. That requires a formal constitutional amendment, not a finance bill clarification. Retrospective tax. Taxing mutual benefit trust retrospectively from 1st July 2017 for a period they had no way to price into members' contributions was held punitive and violation of Article 14. Since we have known that the ruling of AAA framework or AA framework is only applicable to a particular taxpayer and the jurisdictional area. So the end of mutuality concept has been only applicable by this case in Kerala. If, for example, we as an individual in Rajasthan apply for the same case, the court may give a different ruling. We can be treated as a different persons also. However, the Rajasthan AA framework may also take a reference from the Kerala AA framework. Thank you.
So I think on the procedural part, which was covered here, more or less all these procedures are similar to other entities which are registered under GST. There is no such difference. However, on the advanced ruling part, I would clarify that there is a national appellate authority for advanced rulings for taking care of, disputes where there are contrary decisions at state level. Now, in 2025, the GST Council has merged that particular authority with the National Tribunal itself. So now you have National GST Tribunal, which will be taking care of all these disputes or appeals related to advanced ruling authority also at a national level. So that needs to be taken care of.
Good afternoon, everyone. My name is Rudraksh, and I will take you through chapter 4, which is the key sectoral considerations. We have heard the law so far, we have heard the cases. Now comes the practical part. But before we start, the baseline for what we will discuss is GST does not look at who you are, it looks at what you did. Here's the map for what we would be covering. First would be the educational institution. Second would be the healthcare services. Third, religious activity. And last, donation, grants, and CSR, which is the most ambiguous area. Most of the trust runs education institutes. They run schools, college, or coaching institutions, maybe under one roof, but law does not see all three as the same. Law considers all three as different. One roof does not mean one GST answer. So what constitutes as an education institute? The law has given a closed definition. Only the education providing any of the following three is considered as an education institute. First, institution providing preschool education and education up to higher secondary school or equivalent, education as a part of curriculum for qualification recognized by law, such as degrees and diplomas, such as medical degree, MBBS degree, etc. And third, education as a part of approved vocational education source. Anything outside this definition is not covered as an educational institute and treated separately. Now, on the right side, we can see what is not an educational institute, and understanding it is as important as what is an educational institute. So private coachings and tuition classes of NEET, IIT, etc. are not covered under the definition of educational institutes. Foreign institutes not meeting the definition, commercially sold materials and coaching manuals, and standalone hostels which are not a part of an institution are not covered under the definition. So to understand definition in a better way, we have an example. A trust runs a school from class 1 to 12, a BCom college, and IIT JEE coaching. The school and the college are covered in the definition, so they would be considered as educational institutes, and services by them and to them are exempt under entry 66. The IIT JEE wing is not considered as a law recognized qualification, so it is not an educational institution and coaching fees would be taxable. So the trust needs to maintain different accounting for different wings. So here is which services are actually exempt. This table runs in two directions. First, the outside services, that is services provided by the institution to its students, staff or faculty. These are exempt at all levels, whether be it preschool, 12th standard, college or vocational. So entrance examination fees, admission related fees and services to own students are exempt. The second portion is the services which are taken inward, such as transportation of students, catering, security, cleaning, etc. These are exempt only up to class 12th and are taxable under college and vocational level exams and all. The last column is runs backward. Online education journals are taxable for college, but are exempt for college and not and taxable for preschool and 12th standard classes. To understand educational institutes in a more better way, we have two examples. First is related to the online journal rule. A same trust has three wings: college section wing, school section wing, and coaching section wing. All three subscribes to a common publisher, a common magazine, but it would be exempt only in case of college, and it would be taxable in case of school and coaching institutes, although it is a simple rule but could be missed. The second case is of hostels. A standalone hostel is not included in the definition of an educational institute, but a separate exemption, which is a general exemption covered by entry 12A covers hostel resident. मतलब इसमें ये होता है कि 20,000 पर मंथ तक का रेंट है और 90 डेज से ज्यादा का स्टे है, तो एंट्री 12 है उसको एग्जेम्प्ट करती है, बट एंट्री 66 नहीं करती। तो इसका मतलब ये हुआ कि अगर एक में आप एग्जाम नहीं हो तो जरूरी नहीं है आप दूसरी एंट्री में एग्जाम नहीं हो सकते, तो आपको सारी चीजें चेक करके चलना पड़ता है क्या एग्जाम है क्या एग्जाम नहीं है। A question for online participants. A charitable trust runs a NEET coaching center alongside its school. Coaching fees charged by NEET center are exempt under option A, exempt under entry 6 as an educational service. Option B, taxable. A coaching center is not an educational institution. Option C, exempt because the trust is registered under section 12AB. Option D, outside GST as it is a charitable activity.
Raghav Khandelwal.
Sir, answer is B.
Right answer. Now, the biggest sector is the healthcare sector and the second most important sector. Although the center rule is simple here, that look at the activity, not who is performing it, as private hospitals are also exempt under this in some cases. So entry 74 is the anchor point of healthcare services. Entry 74 states that all uh, all clinical establishments providing healthcare services are exempt. Clinical establishments include hospitals, nursing homes, sanatoriums, performing care for injury, illness, etc. So, and other services are also exempt under entry 74, such as ambulance services for transportation of patients, food to inpatients prescribed by the doctor, food to outpatients or attendants is taxable. Diagnostic centers such as pathology labs and radiology labs attached to hospital are part of healthcare services and are exempt. Pharmacy to inpatients. Medicines prescribed by the doctor supplied to inpatients are exempt, whether but are taxable when supplied to outpatients. Now, blood Banks and organ donation. Human blood and components are nil rated, but the cord blood preservation is now taxable with effect from 18 July 2022. Here is a hidden threshold limit. Room charges above rupees 5,000 per day in case of normal rooms excluding ICU, CCU, ICCU and NICU attracts 5% GST. A question for online participants. In a charitable hospital, a non-ICU room is charged at rupees 6,500 per day. The GST portion on the room charge is fully exempt as it is a healthcare service. GST at 5% applies as it exceeds the rupees 5,000 threshold. GST at 18% on the entire amount outside GST as it is charitable.
Kanishka Jain, Kanishka Jain, yes, Kanodia. Manisha,
क्या हो गया ये आंसर?
आंसर भी बता रहे
Hello.
हाँ मनीषा,
Sir, the answer is B.
बी
B.
बी ठीक है.
Now here is a list of activities which are exempt and which are not exempt under healthcare. One hospital can have 3 GST treatments, so it required to maintain different set of accounts for each activity. Inpatient composite treatment is exempt. Consultation by doctors is exempt. Ambulance services is exempt. Diagnosis in a clinical establishment is exempt. However, sales to public of medicine sales by a pharmacy to public is taxable at 5% or 18% as may be applicable by the HSN code. Cosmetic surgery and hair transplant are taxable at 18%. Canteen food to visitors and staff is taxable at 5%. Mortuary services are outside the scope of GST, so they are not considered a supply. Now let's have a closer look at the pharmacy sales. One counter but three GST rates. On general curative medicines, a 5% GST rate is applicable. On protein supplements and other supplements and medicated cosmetics, sanitizers, and non-corrective spectacles, a 18% rate is applicable. And life-saving drugs, contraceptives, sanitary napkins, human blood, and components, etc., are nil rated. Let's understand with example in case of a pharmacy what is exempt and what is not. A ward patient's antibiotics bill inside a rupees 4,000 package are exempt as it is a part of composite healthcare supply. Minutes later, a customer walks in and buys the identical medicine from the counter. But it would be taxable at 5% because it was not a part of the composite supply. Then a protein supplement sachet from the same counter was purchased and it would be taxable at 18%. So same shelf, three different results, but the supply, not the seller, decides the rate. Now the next big question is where does the attendant sleep? If the if the bed of the attendant is inside the patient own room and is billed as one package, then the exemption would be followed as of the patient's room. That is, if the room rent is less than or equal to rupees 5,000 per day, then it would be exempt and 5% GST applies on crossing that limit. If a separate guest room, a dormitory, or hostel bed on campus is booked and a separate bill is made for it, then it would be a lodging service and not a healthcare service. And GST rate on it would be 5% without ITC if the tariff is up to rupees 7,500 per day, and 18% with ITC if more than rupees 7,500 per day. To understand it better, we have a simple example. Mr. Rao stays on a cot inside his wife's rupees 4,200 per day general ward room, billed as one package. So it would be exempt as it is a part of composite supply. Her sister visiting from out of the town books a separate rupees 6,000 per night guest room in the hospital's attached lodge. The room is a standalone accommodation service taxable at 5% because it is under rupees 7,500 per day. Even though they are for the same patient, but the treatment differs. Now, question for online participants. A charitable hospital pharmacy sells medicines over the counter to OPD patients and the general public. The supply is option A, exempt as part of composite healthcare supply. Option B, taxable and independent supply of goods at HSN rates outside GST under Schedule 3. And option D, exempt only if hospital is charitable.
Sohani Rathi.
The answer is B.
B and D बोला B बोला सही है.
B.
The next activity is religious activities. It is a relatively smaller section, and the principal here is the religious activities alone are exempt. Any business activities attached to it are separated and are taxable. So let us start with what counts as a religious place. Religious place is defined as a place primarily meant for the conduct of prayers or worship pertaining to a religion or for meditation or spirituality. This means temple, masjid, gurudwara, all are included. Conduct of religious ceremonies fully exempt. For example, pujas, havans, and festivals like Navratri celebrated in purely a religious manner are exempt. And this exemption is available to all persons, not only to trusts registered under Section 12AA or 12AB. But as soon as commercial element is mixed with these ceremonies, that component remains taxable. It is required to be separated and it is then taxable. For example, entry tickets for a concert component of a festival, sale of goods such as prasad or merchandise for a price, sponsorship carrying advertising and for benefit of the sponsor. Now, this slide differs a little from the previous as it relates to renting of a religious place. In this section, only that those places are covered which are owned or managed by a trust registered under Section 12AA or 12AB. So the first question here should be, is the place even eligible for such threshold exemption? If yes, then the following thresholds are to be taken care of. First, for rooms such as in dharamshalas or ashrams, if the charges is below rupees 1,000 per day, then it is an exempt supply. And if the charges crosses rupees 1,000 per day, then 18% on entire amount would be chargeable. For Kalyan Mandapam community halls and open area, charges would be up to rupees 10,000 per day exempt and 18% on entire amount if it crosses the limit. On shops and commercial spaces for business, charges are rupees 10,000 per month and entire 18% on entire amount if it crosses the limit. But here is a catch. If it crosses the limit, the tax would be applied on whole amount, not just the excess amount. For example, a dharamshala room let out at rupees 1,050 per day, that is just 50 rupees above the entire rupees 1,000 limit. It becomes fully taxable 18% on the entire rupees 1,050, not on rupees 50 excess. So a marginal breach flips the whole transaction into tax, and the pricing is critical for the threshold limit. The next is yoga, meditation, and spiritual programs. These are exempt under entry 1, but the core here should be spiritual enhancement, even if boarding and lodging are included. So to understand it in a better way, we have side-by-side examples. Side-by-side examples. So first is a Section 12 AA registered ashram runs a 10-day Vipassana retreat, fixed meditation schedule, simple shared rooms, no optional spa add-ons, and boating is incidental to the spiritual program. So entry 1 covers the whole package and it would be exempt. In which case exemption would not apply. For example, a wellness resort brands a weekend as a yoga and detox retreat. 1 hour of yoga each morning, then spa treatment, a la carte dining, and it's marketed on relaxation. The purpose is recreation and not a spiritual enhancement. So entry 1 does not apply, and even if yoga is there on the schedule. A question for online participants.
Offline subject.
Online submission. A temple trust registered under 12 AB rents its community hall for rupees 11,000 per day for a wedding. GST is option A nil. Option B GST at 18% only on 1,000 above the 10,000 limit. Option C GST at 18% on the entire 11,000 limit. Option D GST at 5% on the entire amount.
Navya.
Hello.
The answer is C.
क्या बोला? हाँ, नहीं, second. 1700 रुपये.
Right answer. The next portion is the last portion is donations, grant, and CSR. The core here is quid pro quo, that means whether something is in return. The first section is donations and donor number plates. Voluntary and unconditional donations are outside GST as there is no consideration for supply and are out of the scope of GST. These are even not counted in the aggregate turnover for registration. But there are two cases. If there is a naming, if there is a nameplate just for a gratitude purpose, then it does not make it taxable. But if it is for the promotion basis such as brand logo, business slogan, then it would be a consideration and it will become taxable. For example, a trust receives rupees 50 lakh from ABC Pharma Limited to build a hospital ward and named it ABC Pharma Ward with a nameplate. This is a mere expression of gratitude and no GST on the donation. But if the trust additionally displays brand's logo, product range, helpline number on a prominent banner, then it would constitute an advertising service and the portion of payment attributable to that benefit becomes taxable. Now, to understand government grants, we have a benchmark case law that was Epitco Limited versus Commissioner of Service Tax, Hyderabad. In this case, the assessee was entrusted with the responsibility for carrying on welfare activities. Government provided it financial aid, and the revenue authority appealed that the government is client and it should be a taxable supply. But later on, it was clarified by the Supreme Court that for a taxable supply to exist, all four must exist. An identifiable supply, it should be made to a recipient for a consideration, and there should be a reciprocal benefit. So it was concluded that mere implementing welfare scheme does not automatically becomes taxable consideration. Now here is a checklist for a government grant. Now it is a checklist for government grant to be taxable or not. So in these cases, the government grant is generally not taxable when it is given as a financial assistance for welfare, public purpose, research, development, or social objective. Recipient submits only a utilization certificate, which is a progression report, budgeted and restricted for a specified use. Unutilized grant is refunded to government. No margin or fees is retained, and and the company receives no commercial benefits. And when it may become taxable, a service contract, when there is a service contract and payment is merely named as grant, recipients is required to provide identifiable services to government. Recipient charges and fees. It is a milestone link and delivery is required to be made to government as per milestones. Government receives reports, design data, software or IPR, and the vendor or contractor language used in a tax invoice is raised. Next area is CSR funds. CSR funds are the largest source of income for NGOs, but its GST treatment is the most ambiguous one because the same rupee, same company, and same NGO, but there can be two different routes. First would be a pure grant, in which it would be exempt, and the NGO just acts as a trustee role, it just takes care of the money. The second could be a service provider role, in which a tax invoice is raised and the service agreement is entered between, and the services are to be provided in that manner only. Now, this ladder describes what the whole question of CSR. The first step is CSR grant with no service agreement, no deliverables. It is in the characteristics of a donation and it is outside of the GST. Second is with GST with acknowledgement letter and donor nameplates only. It has the characteristics of grant with gratitude. you. So it is not a supplier and it is same. The third is CSR with service and company branding. This the characteristics of advertising service and is taxable at 18%. Some question for online participants. A company pays an NGO under a CSR and with a detailed SOW, KPIs, milestone-based disbursement, and progress reporting. The GST treatment is option A, outside GST. The CSR is a statutory obligation. Option B, not a supplier, mere grant with gratitude. Option C, taxable at 18%. Option D, exempt because the NGO is charitable trust.
Ishika Khandelwal.
Sir, the answer is C.
Sahi.
That's the right answer. Now, here are the key takeaways for the CSR as there is no definitive CBIC circular regarding the CSR. So every agreement is to be drafted with care after taking opinion from a CEO or any other professional. And the test to be applied here is that whether any specific benefit is in return for the payment. Now, here's a summary of what we have listened so far. In education, only law recognized qualifications qualify under entry 66. Coaching centers and commercial materials are taxable. Under healthcare, composite care is exempt, whereas pharmacy, sale of medicines from pharmacy to outpatients, canteen, cosmetic procedure, etc. are taxable. In case of religious sector, ceremonies are exempt, but renting is a threshold based with a cliff edge effect. And in donations, no quid pro quo means no GST. So donor branding for business benefit is advertising and it's taxable. In case of CSR and grants, grant character survives only without deliverables, fees, or commercial benefit, structure, and documentation. Thank you.
Saurabh Bhaiya.